Yeah, to me, I think the challenge for family office is really about, do they actually know what they want? Because family office also have a DNA, right? Do they want a growth? Do they want set up a trust for 3 generations to come? Or do they want to do a sustainable charity? Or do they want to do philanthropy? I think for any family office, they need to kind of have that straight and then think about what is their portfolio construction. I think special situation is not necessary for everybody. They need to think about their ultimate goal and see whether special sits is actually suitable for them. I think there's a different way to do special sits. And the way how we do it in BMBC, how we do it, we're actually very focused on principal protection. We believe in compounding in the teens returns, very steady. We are not going into a very speculative situation where we're going to make money double, triple, like in 1 to 2 years. So the family office that come to us, we always communicate with them. So what is your DNA? We want to make sure that our DNA is matched with the family's office DNA so that we can actually collaborate together. So this is the one thing that I will ask them, like, what is really you want? And then we work on the strategy together.
Well, let's first start in Hong Kong. Hong Kong, about 5 years ago, 10 years ago, it's very difficult to do distressed special situation investing here. Rates are not that high, returns are not that high, and it's an efficient market. Things are booming, and the leverage are cheap. So now, fast forward 10 years to today, you see a lot of opportunity. Assumptions have changed. Capital value from real estate have decreased substantially. People are thinking, instead of capital gain, they're thinking about how to measure returns in cash yield. And that's never happened before in Hong Kong for the longest time. So we believe because of these changes and people are desperate for money, we have this kind of opportunity in Hong Kong. Hong Kong, it's a lot, even though it's within China, but it's a free flow, capital flow economy, dollar base, and have rules and regulation compared to China. So I see Hong Kong have changed a lot over the past 5 years or so. Then, the other geography we are focusing on is Japan. Now, Japan, it's starting to build up a equity story for us, even though we are credit focused. But for Japan, some of these investment that we are seeing, which is different than a year or even 2 years ago, it's very difficult to do deals in Japan. Credit, you can't compete. Rates are low. There's only 2 countries in the entire world that interest rates are decreasing. One is in Japan, the other one is China. Now, we'll get to China in a bit, but Japan, politically it's stable. Financially it's stable. And that's why you see a lot of our competitors are doing deals in Japan equity-wise. So it's starting to build as a compelling story in Japan. And of course, you can also take advantage of the yen. Where is it right now? If it goes back to the norm, then you still get, over a 3-year period, 6-7% return just on the currency away from your investment. So that's Japan. India. Again, I've been investing in India since 2006. From that point till now, Indians have gone through a lot of changes. They have implemented so many economic and regulatory reforms. Now it's making it a lot suitable for lenders to come in. And that's why you see the big guns like Blackstone, Oaktree, the Apollo are doing a lot of deals in Japan, in India. So that trend make it a lot more favorable for foreign investors like us to come in to invest in India. So we do have an appetite in India, but maybe to a small extent because we are here in Hong Kong. And then there's China. China, now because of geopolitical risk, not a lot of people going to China. Like when you said there were a lot of special situation distress opportunity 5, even 7 years ago, right? Today, even if there's a lot of distress opportunity, not many people want to go there. It's very uncertain whether if your money goes in, whether it's going to come out. Those kind of risks, not many people want to bear. And for our fund, I don't think we're going to deploy any capital in China in the near future until we see some stable policy, some recovery in that country.
Yeah, as I mentioned earlier, I believe in steady compounding. I also believe in principal preservation, because any drawdown, it takes a lot more effort to even go back to the original levels. So in the last 4 years, what my key focus for the fund is: 1, principal protection; number 2, low volatility; 3 is actually compounded at the equity-like return, which is teens returns. I believe in with a steady compounding, actually wealth actually accumulated this way. So this is really bonds into the DNA of the fund. And then I have been very, very focused on how I construct the portfolio around my focus. I don't get distracted to, like, for example, cryptos or other popular theme out there. It's because it's not something that I believe in. I have a theory about how the portfolio should get constructed, and I'm very focused and always stay on the path.
Basically, you manage or mitigate risk like any investment you go in. For us, we are private credit. So the key thing is the underlying collateral. We have to make sure it's enforceable. So we usually do business in jurisdiction that it's friendly to lenders, that we can get to the asset if there's a default situation. So that's number 1. It's credit and credit risk. And number 2 is illiquidity, whether or not the underlying asset can be sold at a time that you want it to be sold. And therefore, you got to focus on asset that's liquid, even in the worst case scenario. When the borrower go default, go belly up, with that news, and with the company going bankrupt, with that news, all those negative news, can you still sell the asset at the value that you want? And that goes with, you gotta, at that point, when you do your underwriting, you gotta make sure the value that you're underwriting, the onset, it's conservative enough, even during those bad times, you can sell it. So that's illiquid risk. Then you have counterparty risk. Counterparty risk, yes, it's important, but we look at number 1 first, the collateral, making sure it's enforceable, we can get to the asset. But counterparty risk is, what do you want to do? What can you do? Documents? What can you do to make sure that he's not going to play any games when things doesn't go his way, contractually or outside of contract? Because these guys usually doesn't follow the contract if things go bad. So in that point, what do? You look at the asset. You make sure that, again, the bottom line underlying asset, your collateral, is enforceable. So counterparty risk you consider, but you consider what kind of games he or she's gonna play. And in Asia, then you have, because we are US dollar investor, you have currency risk. And if you invest in India, in Japan, and other jurisdictions outside of Hong Kong is still a dollar-based country. How do you hedge your currency, right? So to mitigate those kind of currency risks, because we're not in the US, we're not in other developed country. When you invest in places like India, Southeast Asia, you gotta make sure that your currency risk is hedged. And therefore, what do you aim for? You aim for a higher return to offset those kind of costs for hedging those currency. So those are the key risks that that we consider when we go into special situation investment in Asia.
Investing to me is a soul-searching journey. You have to be absolutely honest about who you are, because a lot of way of investing can make money. There's people do momentum trading, there are people do deep value, there's people do contrarian, right? As long as you're clear about what you want to do and your own risk appetite actually suit that kind of investing style, you will make money eventually. If you're very good, of course, you have to cross the skill set. However, if you actually lie about who you are, your own risk appetite, which is different from the style that you are actually taking, this is a formula for disaster. Say you're actually risk averse, or you actually cannot actually take the market volatility, and then all of a sudden say, oh, I'm a long-term holder, I'm deep value. That itself is a formula for disaster. You actually have to be absolutely honest about who you are. That also bring back to your first question about, what's the challenge of a family office. We talk about how to set the DNA of a family office. The person who is holding of the head of the family office, they have to set a strategy that they actually can take, that actually is set with their long-term kind of targets. So this is basically the lesson I learned 20 years. You have to absolutely honest with yourself about who you are, what is your long-term growth, and then take a strategy that you think you can take and then suitable for the company.
This is what you learn, when you first started the investment career. You source a deal, you see whether or not you like the deal or not, that it meets all the criteria that your fund set out to do, and then you do your due diligence. And due diligence, you usually depend on, because you are a fund, you are usually, because you source the deal, you introduce the deal to the company, or if you like it, then there's a bias. So what that means that you usually get third party opinion, whether that's third party appraisal, third party legal due diligence, to make sure there's nothing wrong with the investment that you're looking at. And with those third party reports, if there's any flag, can you mitigate it? If you cannot mitigate it, then you just stop, right? And then the next thing is that you prepare for just not one person to call whether to go forward with a deal or not. What usually that you want to do, have a committee, maybe 3 or 4 people to make a decision, to everybody chime in, whether there's any positive or negative, so people can voice, because they're not looking at the deal like the way you look at it. You always will be biased because you brought in the deal. But have other senior member within your team have the experience looking at these deals in the past, opine to it, and see whether or not it's ready to go forward. When you have a team of people to opine to a certain investment to go forward or not, it's much better, because I see a lot of family offices, it's just the senior member call, right? The father or the grandfather, because he's the one that control all the money for the family. But for us, I really like to make sure that what we do here is that, Jenny and I is a senior member in the team, but we also have other senior member of the team that will contribute towards the ultimate decision. So have a committee to form an opinion. And then once you decide to go ahead with the deal, then what do? Asset management is also important, because if you do asset management properly, your exit will get hammered, right? Because how do you make money? You go into the investment, you pay a certain amount of sum, then in order to realize your targeted return, you have to exit, right? At a certain point. Do you exit in a year, 2 years, 3 years? Your asset management will dictate that timing. So you got to do a proper asset management. What I'm referring to asset management is that if the asset or if the loan require additional work during the holding period until you exit, you got to do all that to make sure that your exit value does not impair. And once that timing comes through, because during that asset management period, you will continue to learn what your counterparty is doing, whether it's against you or with you, right? And then if everything goes according to plan, you exit. But we are in the distress business. Better than 50% chance it probably doesn't go the way that you wanted. And how do you handle that? So that goes back to the last question. How do you handle the risk, right? How do you mitigate it? We usually have those kind of mechanisms in place before we even put out the money. So this is where asset management 101 tells you. You go back to your underwriting. What happened if he behaves such a way or the company goes in a direction that is not how you originally planned it in your business plan? And what do? You have all that layout, right? And then eventually, whether you exit in a value that you wanted or exit at a value that below, above, you monitor at that point in time. Assumption will change, time will change. Like back to the two questions before, the trend, right? 5 years ago, Asia is different than today's Asia. What will Asia be 5 years from now, right? Those will always be adjusting over time through that asset management period. So you have sourcing, you do your DD, you got a committee to approve the deal, and then you invest, you do your asset management, fix up whatever you need to fix, and then ultimate exit. So that process, you do it in a fund structure, you do it in a family office, or you do it just for yourself. This is what I follow.
There is a set of way how I want to invest because I started the firm as a family office as well. I have a long-term goal and target for my own family office, right? However, the longer version of the answer is I do talk to any potential investors that come to me. I would discuss my portfolio. I want to see what they think about it. Maybe it could be a portion of their overall portfolio, whether it's suitable or not suitable. I'm very open. I actually disclose all the risks that potentially going to happen in my portfolios as well, because I'm looking for long-term partners, right? People that come to me trust me with their lifetime saving or their kids' education money or their 3-generation trust funds, right? I need to be very responsible about their money as well. So I'm very open to discuss their growth, at the risk that we are taking. And then if they actually agree about how I actually take the risk, then become a long-term partners. People that come to me very often stay with me from the very, very beginning. And then they're still my LPs. And then I have to say, very proudly say, I have a personal friendship with every single one of my LPs. And then I hope that will continue going into the futures.